Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next 30 minutes here on Options Guide TV. Today's date is Wednesday, June 12th. The markets are open and rocking and rolling, and it is a Fed Funds Day. And we're having a lot of fun already because we got the CPI report this morning, and numbers were good. So let's recap what has happened over the last week as far as economic news is concerned. We had API come on out and talk about jobs. Looks like jobs were waning a little bit, and that was bad news, which was good news for the markets. And then the non-farm payroll numbers came out, which the Fed watches a little bit more closely. And those numbers blew away the jobs numbers. So then the market was like, I don't know if I really like this at all. I don't know if we're going to get any rate cuts from the Fed. And now we're into this week, and we end up having strong unemployment number, still around 4%. So it's a very strong, low unemployment number, decent wage group, decent jobs. And guess what? Inflation is actually going down. So what happened to the market this morning? It jumped. As a matter of fact, if you look at the futures contract, there was a huge gap before the opening on its way to an all-new high in the S&P 500 index. So the markets are a little scary at this point in time because of that huge gap up. And it just makes me nervous in general. On Monday, we came in, we looked at a VIX trade, and that VIX trade really liked the trade. As a matter of fact, it was a very short-term trade, and as always here on Options Guide TV, it's not meant to be a recommendation. We're just looking at opportunities, and we hadn't talked about the VIX in quite some time. We saw the VIX trading right around the 13 level. We had the CPI report that was going to come out on Wednesday morning, and then at 2:00 today, we're going to have the Fed announcement. I guess would be the term that I want to use. So we were wondering if we could get a little bit of a move up in implied volatility running into that meeting, and the markets were kind of mixed on Tuesday. So we had a one-day, basically, a half a day and a day trade. We put the trade on Monday. We sold the 13 strike put, and we bought the 12.5 strike put, which was a 50-cent wide short put spread, hoping that the market would stay above 13 as far as the VIX is concerned. And we talked a lot about the VIX futures and how eventually the futures contracts have to go towards the spot as expiration approaches. And also talked about the dynamics, because I get a lot of questions on the VIX about the settlement, because it's definitely different than most index options. VIX options are cash settled, much like the S&P 500 index, but the old SPX, the AM settlement, applies in the VIX. The VIX stops trading on Thursday. That's your last day to trade those option contracts that are going to expire on Wednesday. And guess what? That's the expiration date that we actually traded. Now, I can't show you that. I'm in the paper trading portfolio today, and we're going to look at our NVIDIA position that we have. So I'm not going to, the reason why I'm not showing you the actual quotes was, first of all, they've stopped trading yesterday. But the VIX went down because we had a huge gap up in the futures contract, actually a very strong gap up in the marketplace. I think it's going to have a tough time trying to hold that. But like I said, strong jobs, strong wages, and we're still going the right direction on inflation. That's a lot of really good news for the marketplace, and that's what it's digesting right now, and digested on the open, and hence we saw such a large gap on the open. Okay, so what happened with the VIX? The market was fairly flat. The VIX drifted a little bit lower. On the close yesterday, I had the VIX, when I looked at it, because I mentioned on the show that we would close this out on Tuesday if we could. We saw the VIX at 1287, and our short put spread was trading for about 18 cents. So the the VIX was at 13 and it came down a little bit, but we got such huge rate of time decay in our option contracts that we were wrong about the direction. We were kind of wrong, I guess. The market just kind of drifted a little bit lower, and we still made money on our trade. You could have closed out that long, that short put spread for a net debit of 18 cents to the account. We did a 50-cent wide, 50-cent wide spread, and we received 25 cents for it. Now, I 100% would have recommended closing it on Tuesday because the way the VIX is determined, the actual settlement price is determined on Wednesday, which is an opening rotation. They call it a special opening rotation on the CBOE. And the settlement, if you want to look at that, if you go to Yahoo Finance or even the CBOE website will usually show the settlement. Once again, I'm not going to be able to do this inside the paper trading app. And you type in VRO, you'll see that the actual VIX index settled for this expiration at 12.36. So that would have been the maximum loss on the trade. So if we closed it on Tuesday on the close, like we talked about on the show on Monday, we would have had a small gain, but more importantly, we would have got rid of our risk on that trade with the CPI announcement in the morning. And if we waited until Wednesday and just let everything settle out, well, we would have lost 25 cents on that trade. So just an interesting little lesson in the VIX. The VIX is a very interesting index to trade. I still remember when I was on the retail markets committee at the Chicago Board Option Exchange. I remember, and I was wrong in this, saying that there's no way that retail clients would actually understand how the VIX works versus the VIX future, and how the VIX future contracts actually drive the price of the option contracts going further out in time. And I was 100% wrong. The VIX has thrived. There's been a lot of products that have came off of the VIX index, a lot of ETNs, exchange traded notes, and funds that have been developed. So it's been a very popular product, and I get questions about the VIX all the time. Okay, so the theme today is also on NVIDIA. And back in October, we set up a paper trading portfolio of deep in the money option contracts. Now, that portfolio has done really well. And one of the things that we did in NVIDIA is we actually rolled the options contracts. We went from 3 contracts down to 2 contracts ahead of an earnings report. And I just wanted to show you now that if we look at NVIDIA and we look at our call options on our positions, where the paper trading portfolio is showing where we were at when we did the 700 strike call. And now that call option contract here is going to increase in price. So this was at 700 was our strike price. If we go to the options grid now and we look at NVIDIA, that you basically just take that number, that strike price, 700, and you divide that by 10, and our current strike price will be the 70 strike option contract, and we'll be way out in time. We're still going to June 20th of 2025. So let's go and pull up NVIDIA right now. NVDA. And we're going to have 20 option contracts of this. And right now it looks like, okay, took us a second to move. I got a little nervous there, but we're moving now. Let's go out to 2025 expiration. And we still have, let's also look at this. We still have 373 days remaining for that expiration date. So here's where we're at right here. This is the June 20th expiration date in 2025, 373 days. This is where our strike is at. And we now have 20 of these option contracts. So we're going to come all the way down to the 70 strike option contract right here. And now that we have 20 option contracts inside our portfolio on NVIDIA, and I'm going to let's add 20 here, but it's not really going to change much in general. I just want to show that position. It is now trading for $62. So we had a nice round strike, and this is one of the things that you want to be aware of when you are doing when a stock's going to go through a split. Now, NVIDIA was very nice in that they picked a nice round number, like 10 for one stock split. Now, when you get an odd number, a lot of times you'll end up with odd strikes, and you want to pay attention to the strike that you're buying. We bought this one a while back, but you want to pay attention to what your new strike will be, because if you end up with a odd, let's say 70.333 or something like that strike price, that can happen if you have an odd divisor as far as a stock split is concerned. We had that nice round number of 70. We now see the 70 strike call, and even the 70.5, right? I expect open interest to drop off quite a bit on this. Look at the open interest on the 70 strike call. We have 21,000 open interest. We look at the 70.5 strike call, and we have 1,325 open interest. It's still solid open interest. Don't get me wrong about it, but there's a big difference on nice big round numbers. And this is going all the way out to June 20th of 2025, 373 days away on that position. So now that we've had to move, I'm a little bit nervous about NVIDIA going forward. I do think the path of least resistance, a lot of times after a split on a stock that has done so well, is for the stock to kind of settle down a little bit. Some people will take some profits. We don't have an earnings report coming up anytime soon. We now can adjust our position a lot easier, because here's one of the benefits, instead of just having 2 option contracts, we now have 20 option contracts. So I'm going to sell half of the position. We're going to go short term, and we're going to turn this into a true fig leaf as far as the option is concerned. We have our position on. We're going to sell some short-term calls against it, mainly because we've been doing a really good job of managing the NVIDIA position. And actually, on Memorial Day, we went in because it was a market holiday, and we walked through all the adjustments that we made to NVIDIA, just in general, on the process, how we brought the percentage of the portfolio down so it was equally weighted with the other option contracts that we had inside the portfolio. We then took some profits ahead of an earnings report. We then took some more money off the table, and went back from 100 delta option, which our option contract became, down to an 80 delta option contract. So if you want to check that one out, the NVIDIA is in the title, and it was actually posted on Memorial Day. So now let's keep this position rolling. It's been a great position since we put it on. And you also want to give that with a grain of salt. We've had some positions that haven't always worked out great. So far, our portfolio has been fairly strong, though. Our one position that's kind of hurting a little bit is IWM. That position is actually down 19%. On the NVIDIA, though, overall, we're up about $120,000 on that position, and we still have this to take off of that trade, which is around a $50,000, $51,000 P&L right now inside the paper trade portfolio, which is awesome that TradeHawk also offers up this paper trading portfolio, and it has a lot of the same features of the actual trading portfolio. All right, so 70 strike call. Let's go and look at the options grid. And by the way, if you have any questions, if you are in the Tradier YouTube platform and you see a chat box, you can actually go out and put them in the chat box, and I'll try to address them before the end of the show. So if you'd like to ask any questions about the NVIDIA position, ask anything about the Fed meeting, if you want to chat a little bit about it, just go ahead and throw those questions in the chat box, and I'll try to address them before we end the show. So let's put on our trade for the day. We're going to go all the way back to a near-term expiration, and I'll highlight this in the strategy inside the options playbook. We call it the fig leaf. A more, I guess, maybe common name would be a leveraged covered call, in that we're buying a deep in the money option as a substitute for owning the stock. We don't want to go that far out in time. We don't ever want to do Nvidia around earnings. Had a real strong, one of the things that is driving the markets higher is we've had real good movement in Apple. It's at an all-time high. Now battling with Microsoft for the largest company in the marketplace, and Nvidia is right behind it. So at this point in time, I digress a little bit. Let's go in and look at a 9-day option contract. This is now the June 21st contract. And as always, in the TradeHawk software on the options grid, we are highlighting the most at the money option contract, which is the 126 strike. Implied volatility has came off quite a bit. It was up around 50% implied volatility when we went into the stock split. We're now down around 40%. And I'm okay with that. It's still a lot of volatility. Usually, if you're selling options, you would like it to be higher. But if it is higher, that means there's more risk. So you might get some more premium. But that obviously, that 10-for-1 stock split, what was going to happen after the split, made it a lot more risky to be selling option contracts around that major event. We're up now about 4% on the stock at 489, and I think this is a good time to go out and try to sell some call options. We have a position of 20 in our account, and I'll just leave this up to show you where our current position is at. 62.25 on that port is where that midpoint is on that option contract. And as always, I like to go shorter term, and because we're selling an option on a deep in the money option that doesn't cost as much of the stock, I always sacrifice premium because I can go further out in strikes to do that. So I don't want to sell an expensive option contract like I might do if I am long the stock. If I'm doing a fig leaf, I do not want to be assigned on that short-term option contract because that can create an issue. So I'm going to battle that. So what do? I want to go a little bit shorter time frame, go a little bit further out, bring in a little bit less of a net credit to the account. So if we're looking at the 126 is where the underlying stock is at, very close to 126. The one standard deviation move, which is highlighted in the options grid for the TradeHawk software, that one standard deviation move is right at about 133. That's where the strike price would be at. That delta is 20 in this instance. So the 134 is actually a little bit closer to the one standard deviation move. And so we're going to sell that 134 strike call. Like I said, we're going to sacrifice premium to try to get further out of the money, and we only have 9 days remaining. Still getting a 40% implied volatility, which is a real solid number. And we're going to sell half of the position. I don't want to sell all of it. So in this instance, if we were going to turn this into a fig leaf inside our paper trading portfolio, we would sell 10 of these. And we're going to remove this leg, which is our long leg, our 70 strike call. And we have that position in our portfolio. So we're emphasizing that this is in our portfolio. It doesn't show the split here on the paper trading portfolio, but I don't think I'm going to have an issue sending it, but I'm going to send this to the floor. I'm not 100% sure. We're selling 10 of the June 21st 134 strike call at a mid price of 72 cents. And that order has been sent to the floor. So here we're seeing our pending order right now. Yeah, that's an issue. So it's saying it's rejected because we don't have it. Let's go in and just sell 2 of them. That makes sense. We'll just sell the 2 just to show that we're doing it. And then we'll make note of that. And we're going to hit let's just hit the bid so it gets executed. So we're going to sell 2 of the June 21st, 2024 strike, 134 strike call options. And we're going to sell this and hit the bid at 70 cents. And that order was filled. All right, so we now have our position in. If we look at our portfolio, we'll see our position on our option contract in NVIDIA. We have 2 of those option contracts, and that's simple. I think selling some calls on a fairly large position in NVIDIA is a solid way to play the underlying stock after this 10-for-1 stock split. I want to manage that position. I want to sell something out of the money. I don't want to get pegged on it. So by pegged, I mean I don't want it to come up to my strike price and go in the money in that scenario. And the timing on NVIDIA, I think going into the summer months after the stock split, excuse me, you could see a little bit of a sell-off in NVIDIA. Longer term, we see our long-term option contracts have 373 days remaining to expiration. I still want to remain long the option contracts. We still would like to see the underlying market increase in price. At this point in time, we're talking about $11 move to get up to the 130 strike. So $11 divided by 125, we're looking at about an 8% move, 8.8%. So still a very strong move over a 9-day period for these option contracts in order to get the stock or to be assigned on our option contract, which once again would be an issue with our deep in the money call options. All right. So if you have any questions or comments, please put them in the chat box right now. And if not, well, thanks for stopping by. My name is Brian Overby. You can follow me on x.com, where we are now streaming Options Guy TV live. And if you'd like to, my handle is @BrianOverby. And if not, please check out the Tradier Hub. We have a plethora of great speakers inside the hub, including, obviously, Options Guy TV. And we'll see you this Wednesday at 11 a.m. for the next edition of Options Guy TV. Thanks for stopping by.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.